Hi, Michael Carr, Simplifymyretirement.life, license 2630482. Please see my disclaimer video for more details. This video is about the two different sides of the insurance world. Some people may have had an experience that wasn't so pleasant on one side, and I want to let you know from first-hand experience about the two differences. So, the two sides of the insurance world. Seems like everybody's familiar with a financial advisor and the investment side of retirement planning. It's very simple. You pay them a fee, and for the majority of clients, it means putting your money at risk. Not as many people are aware that on the other side of the aisle, insurance companies have guaranteed contractual insurance instruments. And by guaranteed contractual, I mean they pay exactly as they promise, based on their claims paying ability, as the saying goes. I covered how powerful the claims paying ability of the companies I use, or the biggest companies out there, are. It's at the end of my leverage video. What I'm talking about today is the non-guaranteed side of insurance companies compared with the guaranteed side. You absolutely don't want to get the two mixed up. You may get angry at your insurance company because of an auto claim or a homeowner claim, but don't mistake that side with the contract side. If you make that mistake, it could cost you dearly in your retirement. Some people have told me they don't believe in insurance companies. Nobody that has sat down with me and told me they don't like insurance companies has felt the same way when we were done. They had the two sides of the companies mixed together in their mind, which is understandable. In fact, when I was first in the business, people used to tell me they didn't believe in life insurance. There's an easy way to get them focused. Insurance is made up of two things: a premium, let's just say $100 a month, and the face value of the insurance policy, let's just say $100,000. Since insurance is basically made up of the premium and the face value, what part is it that you don't believe in? I would say to clients. The part where your family needs the $100,000 after you're gone, or the part where you're trying to figure out if your family's protection is worth $100 a month? I know, it's a little mean, but it does make the point. Of course, people believe in insurance, and it is hard to pay that monthly premium. If you don't die 10, 20, 40 years, it adds up, which is why in the good insurance policies, we won't get into different kinds here, there's the ability to build a cash value. So that'll help compensate for that situation. There are actually term policies out there that cost more, obviously, but if you don't pass away during your insured period, they will return the premium you paid. So times are changing. Another important thing I want to mention, pardon me, this is also why long-term care benefits are not just premiums in a nursing home insurance plan. Previously, if you did not need the nursing home or long-term care insurance, the premiums were gone. You had the coverage, just like homeowners insurance if you don't have a claim. And those were big premiums, thousands of dollars a month many times. But now you can have long-term care benefits or nursing home benefits inside an annuity or inside an insurance policy. So there are still benefits for you or your heirs, even if you never use the long-term care insurance side itself. Though the world has changed, trying to keep you up to date, every single person should look into having insurance products in their retirement planning, because that's where safety, guarantees, and leverage come from. See the leverage video. So when an insurance company sells you an auto insurance policy, that's an indemnity policy with maximum and guidelines. And somebody has to decide how much you get paid, an adjuster. The same with health insurance, property insurance. When you have a fire or a burglary, some human being determines what their indemnity should be, and you would need to protest against that and prove your facts against that. But not on my side of the world. Nobody decides on my side of the world if you're owed $1 million if you have $1 million life insurance policy. No one decides if you're going to receive your monthly annuity payment this year if you have a contract. I want you to know that insurance products are for guarantees and leverage, in retirement especially. And the insurance side of the world is especially useful for decumulation or spending, whereas the entire brokerage system is mainly focused on accumulation, gathering money. They gather fees the whole time you're gathering money, and it's really upsetting them that since 2019, people are figuring out they can't afford to pay fees while they're living on their savings. That's in my Rise and Fall of the Main Street Advisor video. But strangely enough, more experienced investors have discovered a partner causes their money to last a much shorter amount of time, thereby putting their retirement years in great danger. So now you can compare the two sides of retirement investing, and you know that if you're like the majority of investors, hiring a financial advisor means you're paying him or her to put your money at some level of risk. And you compare that with the low risk, low fee possibilities, or even the guaranteed possibilities available from the menu of insurance companies. Just thought I'd let that know. Insurance companies made our company great. Our country great, paying pensions since World War II. You should continue to rely on them. They've done pretty well so far. Thanks. Have a great day.